Morning everybody, it's Chris here from Serene Education with the 4 majors and last update for the 11th of July 2012. Hi guys, it's going to be going with 4 majors, starting with the Euro against US dollar this morning. Let's have a look at the daily. Yesterday, not really giving anything back to the market, to be honest with you. Down day nonetheless, testing the prior lows that we saw on Monday. So Tuesday, yesterday, not really doing much, pretty much engulfing Monday's little pullback after we saw that bearish engulfing on Friday. So what has it done? So if you take the lows here at the 1235, if you're just doing bodies, or you take wicks at the 12300, you can see that price is trading below those 2 points. So if you take the body here of these 3 candlesticks over here back in late May, you can see that price has moved higher and then subsequently just recently broken lower, broken through both of these areas here, this consolidation range. And that consolidation range pretty much backs up with some hesitation areas in the past. So if we just take this one over here, for example, on a weekly you can quickly see that it's the 122400 mark. But you can quite clearly see here, back in 2008 and 2009, we had a hesitation at the area. We had a slight hesitation here going into 2010, March, April, May, June. We had some hesitation, and then we saw price falling lower towards that 11,900 mark. And as it seems now, if you look at the weekly, last week's data pretty much pushing through that. Okay, and if we see any consolidation, as long as it remains below this 1224, which on our daily is in this area here, 1224, between 1235 1220, it's in this area here, 100 pips or so, this bandwidth, then ultimately price is going to be long-term negative. So let's have a look at the overall swing price direction. You can quite clearly see very negative indeed, and until you can see quite clearly the CTC very much red across the board. 1 or 2 day or periods of blue, where our template actually gave us a buying opportunity. However, you'd be buying against the overall negative sentiment in the market, which isn't a great idea, and you could actually end up losing. So it's far better to look for opportunities to the short side in this negativity. So as it stands now, we are seeing consolidation. You can see as a very small trading range on the Asian session last night, pulling back. If I go to the 4 hour, you can quite clearly see we've had consolidation. Price not really moving out of this box over here. You can see quite clearly between 1225 and 1230, there's a 50 pip consolidated range here. Price not really moving higher or lower than that. So ultimately this is to remain bearish. Then we want to see a break of that 1225 as soon as possible, and then we can be targeting areas to the downside. You can quite clearly see, as if I draw a nice horizontal line there, that 1225, noticeably a strong support on this intermediate intraday time frame. Swinging lower, which is good. Swing lows, 20 period moving average acting as slight ceiling level a couple of days back. Are we going to see the same thing here? A lot of indecision on the 4 hour period. The last 12 hours very indecisive. Spinning top doji, followed by another spinning top. And this morning, or the last 4 hours, we've seen price moving slightly higher as we go into the European Open shortly. So as it stands now, we've got to see a break below this area at 1225 to see further negativity. All our moving averages are confirming that we should be looking for shorting opportunities, and we should be looking for nothing more than shorting opportunities on this time frame. If, however, you're wanting to look for a trade to the upside or a nice bounce there on that 12,2500, more favorable bounce to the upside, please be aware of any support and resistance levels in the past. We do know that there's a prices capped by this 1230 mark over here. You can quite clearly see 1232 prices head into a resistance. Okay, so if you're going to take any profit, it would have to be short and sweet. If you do see any entries to the upside, look at your CTC strategy on your small time frames, 5, 15, 30 minutes. Confirm that is bullish upside sentiment, and then trade into these areas here. But I would take your profit off the table. I wouldn't let it run unless we get a clear break above this 123200 on our hourly, and then we can target price support and resistance levels like 123800, for example, before we see price reverting to the upside towards this 1250 mark. Hesitation area, there's a bit of a consolidation band in this area here, so that would be a clear target long term if and when price actually trades higher than that all important 1232 area. Just be aware that the 12400 is on our daily, our major support and resistance level in the past. Okay, so we've clearly broken through some major support and resistance recently, end of May going into June. Okay, so if we see any pullbacks, it'll be pullbacks as consolidation at the underside of a major support and resistance level. So ideally, if this is to be long-term positive, we do need to see price trading higher than at least that 12,400 mark. Failure to do so, or to break those highs, would confirm that we're still in that consolidation range, and we should be looking for price to continue to the downside. You can quickly see on my hourly chart that trend line. If I draw a trend line over the swing lows from these highs of here, swing low, swing low, swing low, you can see that price is inevitably going to be coming in contact with this downtrend quite soon. So hesitation, this area over here predominantly belongs to the market. This is going to be the pullback, the consolidation pullback. This 1235, 12400 is our breakout area. So we're trading below that major support and resistance on our daily. As long as that's the case, then if we do see any further pullbacks, they're going to be against the market trend. Notice our institution moving average way up here at 1245. If this is to be positive sentiment, then price needs to be trading above that in order for us to look for any buying sentiment in the market. From here to the institution moving average, this is just profit taking. On to sterling. Let's have a look at sterling. Consolidation yet again on this particular pair. We had yesterday's a spinning top formation at the upside of the Monday candle, which was a bullish engulfing. We've had a lot of selling last week, and then going into Friday we had almost a spinning top. Then Monday we had this upside candle engulfing that spinning top on Friday. However, notice where all this action is taking place at a price support and resistance level that we had in June. Okay, a lot of hesitation. The spinning top trading higher than the 50% of this candlestick wick. Okay, and then you can see as long as that's trading at 50% and at the high end over here, then there's more likelihood for price to push higher. However, we would like to see a decision candle after an indecision candle. This is a spinning top, so it's an indecision candle. We have to see a decisive candle. So if you're trading your bigger time frames and you look at the daily as a confirmation signal, then you would not trade today. You would wait until you had a definite confirmation signal. Indecision, indecision, confirmation. Indecision, indecision, confirmation. Entry here, never triggered it. See, you have to put in play. You got to be very mechanical. You have to put in rules, and then you trade those rules. If you have, for example, a lot of selling, spinning top, doji. So you want a decisive candle, that's our decision, and then we trade that. Okay. Even when you do get your decision candle, doesn't move in your favor. Not necessarily, but then you've given the markets a clear, decisive request, and you would have gone ideally intraday for the highs above this candle because this is engulfing. However, price never ever actually traded above that area, so you would never been triggered in. So here, indecision, we want to see a decisive candle. If the decision candle is bearish and closes lower than below this 1242 area, then ultimately we're looking for that downside to continue, because you can see our CTC is very much in our favor. Showing that negativity, we should be looking for nothing other than shorting opportunities, and most importantly, all our moving averages are above price, acting as a seeding level. Notice these swings are getting lower, and as long as price is trading lower, then we should be looking for sentiment to ultimately be breaking to the downside and testing, ideally on this long-term time frame, the 15300, which happens to be a major support and resistance level over a number of years. Go into our 4-hour, you can quickly see that the institution's above price, ceiling-wise, both the 50 period as well, and you can quickly see that price is consolidating around the 1550, 15500 mark. Hesitation, a lot of hesitation in and around this area. So clearly, got to see price trading below that. A nice bearish engulfing. Notice the CTC has gone red. We have however, our last candle on the 4-hour was arrow. Apologies, was blue. So it's telling us we should be looking out for potential pullbacks, and you can see prices pulling back to the underside. A lot of support and resistance through here, a lot of consolidation areas around here. Ideally, we do need to break below that, get below that, and then we should be targeting that 15,300 down to the downside here. Nice move. Once we break this 15,500, there's 200 pips to the downside. If and when we get a clear bearish engulfing with very little wick to the downside, that's what we're looking for now. Nice entry to the downside. We're not looking for any buying sentiment at this stage. Our CTC is telling us we should be looking for shorting opportunities, because everything at the top. All our indicators are showing that momentum is still, or that long-term or short-term sentiment is still very much negative. So look for breaks below support and resistance. Clearly, on a 4 hour, if we get a nice juicy break below that 15,500, you notice that we had a break previously a number of days ago. However, notice the amount of wick on either side. We want a clear, decisive candle, nice candle to the downside if there's going to be any further bearishness, and it would have to be very little wick. Okay, the less wick there is, the less indecisiveness in that potential move, and it gives you a definite confirmation that the price is selling. And the same with a bullish candle here. If this is to remain positive, we do need to see the institution moving average being broken above 1555, and if that's the case, then we should be targeting these areas roughly where price has been in the past, roughly just short of the 15,700, 15,7500 mark. Clearly, on our 4 hour, you can see we've had hesitation here in the past, so that would be a nice little target area to the upside if and when price actually closed above the institution moving average, above 1555. Nice bullish engulfing candle, very little wick. We want to see more confirmation, the more decisiveness in that candle, i.e. little wick, nice tall body, will confirm that there's more buyers or sellers in that market, and you should see that as a genuine sentiment move. Next up, US dollar Swiss franc. Let's have a look at this. And this is doing really, really well recently, breaking above price support and resistance levels. Noticeably, we had a major consolidation here, roughly around the 9,600 mark. Prior resistance here in early January of 2012. Price subsequently broke above this recently, going into June. However, not able to actually find support once a breakout occurred. We had a little spinning top above that 9,600 mark. However, the next couple of candles that were ideally looking for a bounce, confirming a nice support above there, that failed to materialize, and we got a bearish engulfing candle, and that told us that sentiment was still looking negative. Pull back, and then the continuation to some further downside support in the past. So there we go. That was the areas: 23.6, 38.50, finding support at 50, a morning star formation here, and then price moving higher, and then building again, breaking lower towards 38. However, that sentiment driving to the upside. Finding support, nice bullish engulfing. That's what we're looking for. Nice candle with decisiveness. Just buying straight through. There's no hesitation at the bottom of that candle. The open, straight up, telling us the sentiment was just looking for buyers. Sure enough, taking above this major support and resistance level and heading up towards prior highs. In doing so, breaking above the 975, which was a prior high here on this breakout, and then consolidating. And then yesterday's kind of bullish engulfing. That's a genuine bullish engulfing now. We want to see price actually maintaining these highs now, 977 or 975. Any chance of that happening, then we should see that continuation to the upside. And if that continuation to the upside is still positive, our long-term target should still be that 1,000, which happens to be our weekly prior support and resistance level on our monthly chart, weekly charts, and which coincides with the institution moving average. If I just pan out here, you can quite clearly see the 1,000. If I zoom or just go back, you can see the consolidation range here at 2000 through 2000, mid 2000 to the late 2010. So great target area. As long as you can see the CTC still telling us we should be looking for bullish sentiment to the upside. Now breaking and closing higher than the prior resistance area here. We want to see price now finding support above this area and kicking on to that 1,000 mark. Okay, now 4 hour, you can quite clearly see that the sentiment recently very much in favor of upside momentum. If you look at all the moving averages, you can quite clearly see that our 20, 50 and institution are in order, and you can see price has been making higher swings as we've progressed since early July to the upside. So that's quite great. However, you can see that price is consolidated around the 975, which happens to be the top end of a price support and resistance level, quite clearly here, end of May going into June. You can see very clearly here an indecision candle followed by a bearish candle. These two candles here being a bearish engulfing at the top end of here, confirming that sentiment is looking negative, and we saw price reverting to the downside at that resistance level. Now that we've broken above it in real time here, the hard right edge, we do need to see price building on that now. Consolidating here recently and moving higher, however not high enough to actually break that price swing high here, the high for that time frame. And you can see quite clearly the last 12 hours or so, very indecisive, spinning tops, dojis, and further the last 4 hours spinning top as well. However, if this action can remain above 975, ultimately long term we should be looking for those buying sentiment to refactor. It's only when we get below 975 that we should be worried that price could revert back to a prior support and resistance level, and we should be looking roughly around the 967 intraday as a potential target, which will bring us back towards this 50 period moving average on a 4-hour time frame. Last pair of the day is US dollar Japanese yen. Let's have a look at the daily. I mentioned this that through my analysis that the 80 is a major support and resistance level, and that if price was still to remain positive upside, then we need to see that area being broken as soon as possible. Notice how much consolidation has taken place at this area recently. Okay, you can see that price through May right through into July has found resistance or failed when this area has been broken to actually move consecutive to the upside. Each time it's broken through here, we've seen a consecutive bearish engulfing. So we know straight away that that sentiment is generally still not favoring upside positiveness. However, we still see price hugging the underside. So the sentiment is still looking for upside favor, possibilities. However, the overall sentiment on the market out there just does not favor any move into the upside. Notice we went into a squeeze pattern at the underside of the 80. Okay, you can see the CTC very much red across the board. We did see one particular day where we saw the entire strategy going in our favor, i.e. the blue arrow, blue candle, and the CTC histogram on the other side going blue. However, that trigger signal was actually a spinning top, and that spinning top actually happened at the underside of a major support and resistance level. So we had an indecision candle, which happened to be our bar candle, at the underside of a major support and resistance. So that actual signal became null and void. You never ever take a trade on a spinning top or a doji because it's indecision. We want to see the market giving us a clear and decisive candle, and then we act on that. Otherwise, it's not even worth pulling the trigger. Okay, we had too many things against us. Well, the actual strategy was in our favor, and if you look at everything up until that point, even our moving averages were in order. 20, 50, and institution below price acting as support. So everything was in our favor. However, 80 support and resistance here, a major support and resistance level, was still above price, acting as a ceiling level, and the candle was not a bullish candle. It wasn't telling us that the sentiment was bullish. It was telling us the sentiment was indecisive. Okay, if the next candle had actually closed higher than 80 with a lot of momentum, i.e. a nice bullish engulfing with very little wick, that would have been a great confirmation signal that sentiment was generally positive. There was a lot of buying in the market, and then we should have been looking for targets to the upside. Ultimately, long term, this one above here at 81.50 would have been a great start. But indecision, don't trade it. Trade decisiveness. Look at that. Next candle, bearish engulfing to the downside, and you can effectively trade it to the downside on the past couple of days, going lower. And notice our CTC very much in our favor now. Today on the Asian session, price moving lower at the start, going into the European session open this morning. We could be looking at targeting the 79, which happens to be the institutional moving average, on our daily. Otherwise, break of 79, we should be looking at roughly around the 78.50, just short of the 78.50. That's our prior swing here, 78.70. Ultimately, the big one to the downside would be here at 78.00, because that happened to be that prior breakout and support resistance that we saw. That actually price actually found resistance by these the intervention candles here from the Japanese government. But you can see quite clearly hesitation at this area through most of August, September, October, November, December, January of this year. So quite clearly an area of major support and resistance levels, and you've got to make a note of that. So clearly if prices to continue falling here on the hard right edge, notice our CTC is in our favor. The institution would be our first port of call. Okay, a break below that, then we should be looking at this price swing over here as our first major target here, 78.70, followed by the 78.00. That's it, guys. I'm not going to finish off today. Hope you find the analysis to your liking. Please be aware there's a lot of news announcements today, very important news announcements. We have the German 10-year bond auction. That's going to be quite interesting, one to be really to be aware of. It'll be interesting to see what the 10-year bonds are going for these days. And followed by that, we have the 1:30 GMT US trade balance figures, guys. It'll be interesting to see how those trade balance figures comes out. Previous figure was a negative 50.1 billion, expecting a forecast of 48.5 billion trade balance. So if it comes out higher or lower, that will be of very interest, because if the actual figure comes out greater than the forecast, we could expect good things for the US dollar. Okay, then later this afternoon we have FOMC meeting minutes. Very important piece of data at 7 p.m. GMT our time. Very important, because it just gives you an in-depth look into the economic and financial conditions that actually govern the interest rates. So we can look at the FOMC meetings in some detail, and we should be able to gauge if we are likely to see any changes in the US interest rates coming up. So be aware of it. Other than that, keep your strategies, your setup simple. Make sure you trade. You're plotting your major support and resistance levels, and if you are using this particular template, that you're following the rules of the template. Okay, very important. And back it up with sound money management rules, guys. Be very strict with your management rules. Okay, you can have the best strategy in the world, but if you don't back it up with sound money management, it's worth absolutely nothing. Other than that, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.